You are looking live at the Nasdaq. Every day in the market tells us a little something and provides information for us. Last Friday, we saw the index really sell off hard and close near the low of the session, and it was below its 10 and 21 EMA. But there was a lot of angst or anxiety heading into the weekend due to geopolitical situations. And then they come back on Monday and just kind of buy it back up what they sold. It's kind of like everybody's selling, so I might as well sell too on Friday. So just get out, cover your bets and take profits or take losses, whatever. It was just sell mode on Friday, but I just wanted to point out that today was just an inside day. They got most of it back. So we're back to like even the prior session closed at 13,574, and today we closed at 567. So we lost 7 points in between that the big ugly bar on Friday, and then we got it back today. So really nothing. There's a lot of caution ahead of the earnings reports this week. There's some real big earnings reports starting tomorrow morning with Johnson and Johnson, and there's some bank stocks, and then Wednesday we have Tesla and Netflix, which is going to impact the the Nasdaq for sure. But I just wanted to point out here that once again it just traded up against this 50 simple moving average and could not power through. It's 0.1% below, so it's knocking on the door. I do want to point out though that today we had a move of 1.2% with volume that was higher than the prior session. So more buyers and sellers, which might show that the institutions are coming back in, or maybe some short covering. But anyway, we do like to see moves of 1% or higher on volume, which is higher than the prior session. So that's all positive for the bulls, but the proof is in the pudding. They're going to have to deliver stellar earnings. And we saw last quarter's earnings, there was just a lot of implosions, and it's really dangerous to be holding your stocks through earnings. Even if you think you have a big cushion of 15, 20%, we saw, implosions of 25, 30%. So you turn a profit into a loss overnight, and that hurts. Anyway, I'm just going to get to the mega cap technology stocks. This is Apple. That pulled back to its 50 today. There was some news about the iPhone. It wasn't strong sales in China. Kind of expected that after the China policy with their government. So anyway, we'll have to wait to hear from Apple later this month. And then there's Microsoft. The double bottom pattern, just like Apple, just like the index. But this one is through its 50, and now it's 2.4% above the 50. So Microsoft definitely looking better than Apple, but neither of them are looking as good as King Google here. This one kind of like this action here. It pulled back to the 10 last week and last Friday, I guess, and got it back today, but it's just an inside day forming this little wedge pattern here, which could be an add-on buy point there around that 139 area. Kind of liking this action here in the Goog. But like I said, there's earnings, right? Next week, so next Tuesday. So like I said, proof is in the pudding. They're going to have to deliver the goods, and if they do, I'm sure the stock will rock. Same with Meta Platforms. This one looks a lot better than the Apple and Microsoft. This consolidation, first of all, it had this massive move, right? It's been up like 150%, and then it consolidates here, which I like. This little 3-month consolidation period. Now it pulls back to its 10 EMA on Friday, and it's forming this like little wedge pattern, just like Google. So Google and Meta, I think those are like, and Microsoft and Amazon and NVDA, the ones that are going to benefit most from the artificial intelligence boom. This is Amazon. They got upgraded this afternoon after the bell. I want to say Piper Sandler, I forget. One of them upgraded the stock with a real, I think $180 price target. So really, raised price target here on Amazon. Not doing much in after hours. We'll wait and see tomorrow if that upgrade helps that stock. Tesla, they have earnings, like I said, on Wednesday, and we'll have to wait and see on this one. It's trading above the 50. Volume is, waning. You can see caution ahead of the new data points. I don't think the earnings are expected to be that great, but we'll see what they have to say about business prospects going forward. And the last one is NVDA. This one, it ran through its 50. It's just consolidating. First of all, it's just within this little base pattern here. Nice consolidation. Looks like a flat base. But it traded below the 50 and rallied through it. And now it pulled back on Friday. Looks like it found support. Doing nothing wrong. Yeah, it's doing nothing wrong. Looks okay. I'm going to bypass the oil and gas, energy, and all those stocks today and get to something super sexy, and that's the insurance stocks. ACGL, new highs. I mean, why not? These things are benefiting from the higher interest rates. And you can see, I mean, above average volume, this thing's trading higher. It had this cup with handle pattern and is playing out. I forget where the buy point was on this, but I took it off. It was on last week, I believe, or maybe the week before, because it's getting extended, and just had a nice day today, another 2% move. That one looks good. KNSL, KNSL Capital, this one made another new high today, and this one's just on the heat list. It's just respecting its moving averages. It broke out here, pulled back to the 50 for the first time, and then just keeps rallying higher. It did pull back to the 21 one time and found support. That one looks good. This is Gallagher, AJG, Gallagher Insurance Brokers. I only know of this one because the doc notified me of this stock, and it was back here when it was forming this cup with handle, and this thing certainly has moved higher. So thank you, Doc. That's a nice move on Gallagher. And the last one I want to point out is the Deion Sanders, Nick Saban, Aflac. This thing is flying like an eagle and not like a duck. They might need a new mascot. Unbelievable breakout and just rip higher. So good for the longs at Aflac. Aflac. You can see it, it's an insurance company. These things are not going to move like your tech stocks, but definitely, cup with handle base moves higher, consolidates, moves higher, consolidates, and now it's moving higher again. That's on the weekly chart. This thing looks great to me. I mean, new highs every day for like the last 2 weeks. Who doesn't like that? Anyway, that's it for the sexy insurance stocks. I'm going to go to stocks that I really like here. And this is Eli Lilly. This is on our ready list this week because, institutions are buying it here. It's formed this little consolidation pattern. I don't think it's going to give you much of a break. It broke out here on, let me get the right date. I think it was August 8th. Yeah, August 8th. And then it pulled back to its 50 for the first time after the breakout. Immediately found support and just rips higher. So I think around that 601.84 is an area of interest. And you can see the above average daily volume bars are all blue, except for this one day it was pink. I forget what the heck happened on that day. Yeah, I don't know. The government's lowering drug prices or something. But on the weekly, you can see the institutional support here on Eli Lilly. And if I just go to the owners, you can see the ownership increasing. Over last year, 4,000 last year, 4,500, almost 4,600 now. So. And you can see the Fidelity and these fund managers increasing their holdings in Eli Lilly. So definitely a huge winner. Obviously, they have the weight loss drug and Mounjaro, and they not only that, they have a lot of big pipeline. Novo Nordisk is another one that I like. I actually like this one a little better than Lilly because it's trading a little calmer. Lilly's probably going to outperform. But Novo Nordisk is a real calm stock. You can see this consolidation period here after its breakout, and that's got to be August 8th, same day as Lilly. Yeah. So a nice 17% move, and really it's just been consolidating in a base here. But I like it. $100.88. I would think that would be a new area of interest for Novo Nordisk. You can see the big blue volume bars. They stopped a trial last week due to the success in a renal kidney failure, and also they raised guidance on Friday. They bought a company today for cardiovascular and heart. And this is just a company with a phase 3 trial. It doesn't have proven drugs. So they're just adding to their pipeline, which is smart, diversifying. They're not just a diabetes play. They have a lot of different drugs and spend a lot of money on R&D. And you can see the big blue volume bars above the weekly average. So Novo Nordisk, big winner. They're going to continue to raise guidance as long as people want to use their drugs to lose weight and cure diabetes or help with their diabetes. And perhaps in the future, it could be a kidney drug as well. So anyway, that's enough of Novo Nordisk. VRTX, this is one that was on our ready list. Nice consolidation pattern here. I believe that's a flat-based pattern. Like I said, this one, it marches to the beat of its own drum. You can see that it retested this low here a couple of times before just ramping. There, 340 to 374. That's a nice move for VRTX. And I'm probably going to have to take it off our ready list. Yeah, it's a flat-based pattern. And you can see the consolidation there. It goes back to, July, middle of July. So, 11-week base, that's a substantial base, significant enough for it to move higher and form another base. So VRTX looks good. And there are not many drug stocks that I like right now, but those are three that are doing well. The electrical contracting manufacturing stocks are just on fire. This is Celestica. Once again, the big breakout is when I tell you, don't ignore these moves. This one has not even pulled back to its 50 and made another new high today. FN is another one in this group. Big breakout. Like I say, don't ignore it. This one hasn't even come close to its 50. And then JBL, earnings breakout. This thing is just can't even come back to its 10. 3.3% above it's this green line here, which is the 10. So those are three strong stocks. I want to take a look at the data center stocks. Should be a strong area of interest if this AI thesis is going to play out. This one is starting to calm down. It only had a intraday swing of $17 instead of the normal 20, but you could see this cup and now forming this handle there as it pulls back. I like this action here. That's why we have it on our ready list. You could use that 287.73 as a buy or the 298.35. I'd say the earlier the better, as long as it, it did this shakeout +3. There you see the cup with handle pattern 10 weeks, but it did the shakeout +3 pattern of, here's the first shake, boom, came up, second shake, which forms really a double bottom, and then just rips up. This one ramped way more than 10%. But now pulled back to the 21 on Friday when everybody was panic selling, and then had a nice inside move today. Like I said, on Friday, normally this thing has, 315 to 292. So that's $23 move. And then on Friday had a $20 move. And today it only had a $13 move. So it's really calming down here. SMCI, like I said, this is not for everybody. Some people just cannot handle the volatility, and I get that. Vertiv Holdings, this is another data center play. On Friday, pulled back to its moving averages. People panic sold. Today, just an inside day. This one looks good. Earnings here on the 25th. So beware of the earnings dates this time of year. You really got to be careful. The last one I want to show is a stock I haven't talked about much is Iron Mountain. This is another one. It doesn't have the growth like the other ones, but I like this chart pattern here. Is it had this, this sell off here, kind of like SMCI. The sell off, the move up, then the second sell off below the first one, and then ripped. It ripped right up from that low there of 56.75. And then ramped right on up to 60.89, 61. So that's a nice 10% move. So Iron Mountain looks pretty decent to me. I'm going to keep watching that one. I like double bottom bases. And let me see, retail. If you listen to financial experts or pros, retail's dead. If they're going to die in the Great Recession, and if you keep listening to that, it becomes a self-fulfilling prophecy. This is Abercrombie and Fitch, which is not listening to the financial media and just keeps making new highs. This stock broke out back here on May 24th, ramped higher, didn't even pull back to the 50. Again on earnings, August 23rd, it ramped, pulled back to the 21, just keeps making new highs. So Abercrombie and Fitch is not having it. Lululemon, I have to mention this stock because it's going into, first of all, I like the chart pattern. It's consolidated for a long time. You can see this, cup with handle, it just keeps handling out, can't sustain a new high. But today, it does make a new high, and as it enters the S&P 500. Now, normally I would say a move of more than 10% on nearly 800% above average daily volume is, a move not to be ignored, but I'd be careful here because it's not going up on an earnings beat, it's going up on an inclusion into the S&P 500. So I'm talking out of both sides of my mouth, right? Like, don't pay attention to this move because it's based on news or a move into an index and not on an earnings beat. There is a difference, but definitely don't ignore that move. That's a nice breakout. And, they traded below the 50. Once again, gosh, a lot of these, this is essentially a double bottom, even though it made a new high there, 359, then ramped up, then made another lower low there. And then has really ramped higher. That's definitely more than a 10% move. That would be, 30 something dollars. But anyway, Lululemon, we had it on our list before. There's the undercut of the prior low, which makes the double bottom, and then the ramp higher. So anyway, got to acknowledge Lululemon. That's a heck of a move for a big stock, and congrats to the longs there. Inclusion in the S&P, that's a big deal. This is Williams-Sonoma, huge base here on this thing. Nice consolidation, had a 3 weeks tight recently. And then that thing worked. It moved higher it's been higher for the last 3 weeks and had a decent move today, right? 0.5%. They have earnings not until November 16th, but gosh, that weekly chart looks really good. This one may appear back on my ready list. Anyway, I'm not ready to give up on retail. Not just yet anyway. They've already had pretty rough time. Anyway, that's it for today. Thanks for watching, except for I lied. One more thing in the honor of the great Steve Jobs. I got to talk about this. This rotating market, there's been like a rolling recession here of different groups, and it just switches off. This is the retail, not the retail. This is the banks. The banks have not participated. The Nasdaq's up 26-27% this year, and these banks are down. They're sucking bad air, even with higher interest rates, and they're not helping the banks at all. Bank of America, this thing's really been hammered. Morgan Stanley, I know it's a well-run bank, but man, this thing is not participating. A move from 100 in February down to 78. That's not my idea of a winning stock. So those things have been hammered. The drug stocks, we've known since the Biden administration has been in, these drugs have been on their radar, and the administration is trying to lower drugs and drug prices. And well, since the COVID, obviously they had a big rush for COVID, right? And they did well during COVID, and then they crashed. It's like a climax and then a crash, and they just cannot. They cannot regenerate themselves. They can't find a low. This is the XBI. There's no low here. I thought this was a low here. It looks like a climactic low action, but it just keeps going lower. That's the XBI. Moderna is another one. Now, this is Pfizer and Moderna are obviously COVID stocks. This one had a real climactic move, and then it's just crashed. They just can't go anywhere, and this is why the drug stocks are just really in a bad bear market. This is a GlaxoSmithKline. It's a diversified stock. It's not all just drugs, but this is a 75 billion market cap after this massive downturn, from at the start of 2022. This has been almost 2 years that it's just been in a downturn. Just the drug stocks are just, you got to stay away. Johnson & Johnson reports tomorrow. This is a Dow Jones Industrial Stock, I'm going to go to the daily. This is has not participated in any type of rally here. 180 to start the year, 157. I mean, this is, I know they pay a dividend, but that's not my idea of a winning stock at all. I don't want to hold that. So the drugs have been in a decline. The banks, I've got to go to the software stocks like Snowflake. Got to go to the weekly charts here. Just a sell off, and they bottom and they bottom and they retest their bottom, and they can't go anywhere. So this is bad action here. This is a big sell off. You know, it makes this little stage one. It tries to emerge and just falls right back. That's a Twilio, Digital Ocean. I could post a lot of these software names. Just the same thing here. It looks like they're going to move higher, and then they just crap out. So this is just a rotating bear market. So it's really, even though the Nasdaq's up quite a bit this year, it's not a rising tide that lifts all boats. You have to really be selective in your stocks. This is a stock picker's market. I know I say it a lot, but it's totally true. General Mills, you can see these food stocks have just fallen off a cliff, which tells me that, you know, food inflation is going to be waning. That's General Mills. They're a big food company. This is a Hershey, 40 billion market cap, and this thing just is falling out of favor. Which, you know, if you're a consumer, you're thinking this is good, right? Campbell's Soup, another big stock that's just fallen out of favor, and that tells me that, you know, just another bear market in the food area. You know, the food, the banks. There's a lot of them that I could go through, but I'm going to stop there, except for I lied one more time because I've got to go to these retail stocks like Dick's Sporting Goods. This one was 152 and now it's, you know, 110. This one sold off a lot. I know it's had organized crime affecting some of their margins and some of their profits, but they're going to fix that. These retailers will fix it and they'll get better. Retail is one of the areas that you know, the financial media loves to pound on, like the consumer stopped spending. But as long as people are working, they're going to be buying stuff, dining out, traveling, experiences, maybe not, you know, buying clothes as much, but these stocks have been sold off and left for dead. That's a Gap, Crocs. We know about this one, you know, 150 to 85. This one looks like it might be forming a bottom. Speaking of bottoms, Foot Locker looks to me, this looks very much like a bottom. If you're into that type of style of buying, you know, you got to be patient because it made this low of 14, kind of retested there. At 16 now, it ripped through its 50. So this looks pretty good for Foot Locker. Skechers is another one. Shoe stock. I'm going to these shoe stocks. People wear shoes, right? They buy shoes. Skechers sliced its 200. Now it's trying to ramp back through its 50. So these things look to me like they're starting to bottom, show bottoms. This is Deckers. This is still on a flat base consolidation, and it you know, needs to trade back through its 50. And of course, the ones that are always talked about on financial media, Target. This one's going out of business. They had some real bad PR moves. They had you know, organized crime. They've started to make some moves though. They're closing some stores, going more direct to consumer, and you can see this looks like it's trying to bottom here and rally back through its moving averages. So I wouldn't give up on Target. This is a real big company. It's well managed. The CEOs, nobody's fool. They're going to figure it out. It's just how low is this going to go? And Disney's another one. Just poor PR. They've got some real issues. They have a, you know, a leader there. I don't know, might be just collecting checks. I thought he was going to make some moves to improve the business, but we'll see. We got to give him some time. And this one looks like it's made its low here. This is a weekly chart and starting to trade through its moving averages. So here's Disney making this low and then rallying through the 50. I wouldn't call that a rally, but trading through the 50. Anyway, I know that's a lot of stuff today, but I just retail is an area that I really like. I enjoy researching retail and seeing which companies are doing well. And I think as long as people are working, they're going to be, you know, consuming things, and retail is a big part of that. So anyway, that's it for me today. Thank you for watching. At mcstockcharts.com, we never give up.